Okay, let's unpack this. Imagine an industry that's, already moving like a bullet train. Fast, modern, constantly evolving.
A lot of innovation happening already.
Right. Now, picture that bullet train suddenly getting, like, jet engines bolted onto it. That's the kind of jolt we're talking about today in the Indian mutual fund industry. The big news that just hit. SEBI, the market regulator here, has officially approved the joint venture between Jio and BlackRock. They're in.
It really is a monumental development. You've got these two, well, giants, frankly. Incredibly different, but both immense in their own ways.
Absolutely. So our goal in this deep dive is to sort of peel back the layers on this partnership. Who are these players globally and here in India? What do they each bring? And really, what could all this mean for you, the everyday investor?
And maybe how it could just fundamentally change the whole game for mutual funds here.
Exactly. We've been looking at a recent analysis that really tries to break down the implications. Big stuff.
And I think the core question that analysis raises is, could this JV revolutionize mutual funds in India? Maybe, like Jio did with telecom.
That's the big parallel everyone's drawing. So first things first, the news is confirmed. Green light from SEBI. The Jio-BlackRock venture has permission to operate in the Indian mutual fund space.
Correct. It's official. They've got the regulatory nod.
Right. Now, to really get a sense of the potential impact, we need to understand the sheer scale here. Let's start with BlackRock.
BlackRock. Okay, describing their scale is, well, it almost defies belief. They are the world's largest asset management company. We're talking $10 trillion in assets under management. AUM.
10 trillion.
Yeah.
Just, wow. To put that in perspective for everyone listening, India's entire GDP right now is around, what, $4 trillion?
Yeah, about that.
So BlackRock manages assets worth more than double India's whole economy. And compare it locally. Reliance Industries, a giant here, market cap around 19 lakh crore rupees. BlackRock's $10 trillion translates to roughly 85 lakh crore rupees.
It's just massive, a global powerhouse, no question. And because they're global, to operate directly in the Indian market like this, they needed an Indian partner, a joint venture.
It's a regulatory thing, right? Like you see with, say, Bajaj Alliance.
Exactly like that. Allianz is the global partner there. Here, BlackRock needed an Indian company, and they chose Jio.
Which brings us neatly to the other side of this equation. Jio, part of Reliance, and their history. Well, it's all about disruption, isn't it?
That's the word everyone uses, and the telecom example is just so vivid for people here.
Oh, yeah. Remember when Jio launched? It wasn't just another mobile company.
Not at all. They completely flipped the script. Calls, SMS, things we used to pay quite a bit for suddenly became essentially free, and data costs just plummeted.
Millions and millions of people saw their phone bills shrink dramatically. Huge benefit.
It was classic disruption. And crucially, unlike a brand new financial player, Jio isn't starting from zero in terms of reach. They already have this incredibly deep distribution network across India.
Woven right into the fabric of the country. That existing reach is key. Okay, so that's the players. What about the playground? The Indian mutual fund industry they're entering.
Right, the current landscape. According to the analysis we looked at, there are about 46 companies operating right now. Asset management companies, or AMCs.
46. And together, they manage around 70 lakh crore rupees in AUM.
70 lakh crore, which sounds like a lot, and it is substantial growth over the years. But here's a telling number. Active mutual fund folios, basically individual investor accounts.
Okay.
There are about 24 crore active folios.
24 crore? In a population of what, 145 crore people?
Exactly.
Wow, so hold on. Out of 145 crore Indians, only about 24 crore have an active mutual fund account.
That's the number.
That single statistic just screams potential, doesn't it?
Yeah.
Huge room for growth. The penetration is still relatively low.
It absolutely highlights the opportunity. And this is where that synergy, that combination of BlackRock and Jio looks so incredibly potent. They each bring something unique and powerful.
And the analysis really points to BlackRock's key strength being technology. Yeah. Specifically, this AI system they have called Aladdin.
Aladdin. Yeah, it stands for Asset Liability Derivative Investment Network. Think of it as a hyper-sophisticated AI brain designed purely for managing investments.
And the advantage over, say, a human fund manager.
Well, the big one is it's emotion-free. Human managers, even the best, can get swayed by market panic or, excessive optimism, fear and greed. Aladdin runs on data and algorithms, pure logic.
And it does more than just track numbers, right? The analysis mentions some serious capabilities.
Oh, yeah. advanced risk analysis across entire portfolios. It can simulate the potential impact of major global events, think about COVID, or a war breaking out. How would that affect different assets, different sectors?
Stress testing, too. Like, what if interest rates jump by 0.5%?
Exactly. It can model that, show the likely impact, and even suggest how to adjust the portfolio. It integrates just vast amounts of data, economic data, market data, client-specific data.
And it learns.
Constantly. Every market event, every boom, every bust becomes data that refines its future predictions and strategies. It learns from experience at a scale and speed humans just can't match.
That's pretty powerful stuff. And it sounds like they're serious about leadership, too. The analysis mentioned Siswaminathan.
Yes, he's slated to be the CEO of this joint venture, and he previously managed, get this, $1.5 trillion in AUM back at BlackRock.
1.5 trillion. Okay, so they're putting top-tier experienced talent in charge.
Definitely signals serious intent. Now contrast that tech power with Jio's strength, distribution, unparalleled reach.
And this is where Jio's different, isn't it? They're not just in the big metros. They have a presence way out in semi-urban, even rural areas.
Places where traditional financial services might still be harder to access for a lot of folks.
Right.
And here's a fascinating statistic from the analysis related to that. Currently, over 50% of new SIP accounts, systematic investment plans, are actually coming from these semi-urban and rural areas.
Over half.
Yeah.
From outside the big cities. Wow. I wouldn't have guessed that high.
It shows where a lot of the new growth is coming from. And these are exactly the areas where Jio already has a massive footprint. Think about it. Over 5,000 Reliance digital stores across the country.
Yeah, they're everywhere.
Reliance BP petrol pumps, too. And of course, the Jio mobile network itself reaches deep into smaller towns and villages. They're already connected to these potential customers.
So you take BlackRock's Aladdin, that cutting-edge AI, sophisticated investment tech and you plug it into Jio's massive distribution network, which is especially strong in those high-potential Tier 2, Tier 3 cities and rural areas.
That's the combination. It seems custom designed, really, to unlock those underserved markets, to potentially bring complex financial products to millions who maybe haven't had easy access before.
Okay, so this brings us to the core question for our listeners. What could this actually mean for you, the individual investor? If we use that Jio-Telecom disruption as a possible guide, what are the potential game changers?
Well, the biggest speculation naturally revolves around cost, lower costs.
Right. Mutual funds have charges, expense ratios, for example.
Exactly. The expense ratio, that annual fee, it can be anywhere from, say, 1% to maybe 2.5%, depending on the fund.
Which sounds small, but it adds up. The analysis used an example. If you have a 1 crore rupee portfolio, a 2.5% expense ratio is 2.5 lakh rupees. Every single year. Gone.
It eats into your return significantly over time. Then there are exit loads sometimes if you sell early, maybe 0.5%, 1%.
So the thinking is, given Jio's history,
the speculation is they might come in and drastically cut these, maybe slash the expense ratio way down 0.5%, lower, maybe get rid of exit loads entirely to attract people. It's certainly possible based on their past playbook.
Okay, lower costs. What else? Accessibility?
Big time. Think about the minimum investment amount. Right now for an SIP, it's typically, 500 rupees a month?
Yeah, around that usually.
Could this JV push that way, way lower? The analysis raises possibilities like 100 rupees a month, 50, even 25 rupees.
25 rupees a month.
Or even, thinking back to older models like the Sahara daily collection schemes. Could they enable tiny daily investments, 1 rupee, 10 rupees a day, collected digitally, perhaps?
Wow. If they did that, it just blows the doors open, doesn't it?
Yeah.
Someone earning a small daily wage in a village could actually start investing. It makes it accessible to practically everyone.
It fundamentally changes the barrier to entry, expands the potential investor base massively.
And that itself, could that benefit people already investing?
Potentially, yes. Think about it. If millions of new investors start putting money into mutual funds, into the stock market ecosystem, that's a huge increase in overall demand, more buyers, more capital flowing in.
Which pushes up asset prices.
It certainly can create upward pressure on asset value. So your existing investments could potentially grow faster just because the whole market participation has expanded so much. More demand chasing the same assets.
Okay, interesting. And the how of making it accessible, leveraging Jio's network.
Exactly. Look at their ecosystem. 40 crore mobile users. The Jio Finance app already exists. Their digital wallet. JioMart, Reliance Retail, Reliance Digital Stores.
The physical presence, too.
Right. The analysis throws out ideas like Could they train the salespeople in Reliance digital stores to also act as mutual fund agents? Let people literally walk in and open an MF account.
Like buying a phone plan, but for investing.
Maybe use simple QR codes to make quick investments. Or even link investing to loyalty points or discounts on other Reliance stuff, buy groceries, get a small MF unit top up, something like that.
Weaving it into daily life, making it seamless.
That seems to be the potential strategy, making it incredibly easy and integrated.
And this whole approach, the analysis calls it Jio's disruption mindset.
Yeah.
What does that mean in this specific context?
Well, it implies they're not just aiming to be, the 47th player in the market, competing politely.
Right, not just joining the club.
No. The disruption mindset, based on their history, suggests they aim to fundamentally change the industry structure. The analysis used an analogy. Like when a VIP convoy comes through, other traffic has to adjust, make way, clear the road.
Good.
Jio tends to enter markets with the intent to become dominant by offering something radically different, often on price, or accessibility that forces all the existing players to react, to innovate much faster, or risk getting squeezed out.
So less about incremental improvement, more about potentially forcing a transformation on everyone else.
That seems to be the underlying strategic thinking, yes.
Okay, so let's try and summarize the potential impact here. Based on everything we've discussed and the analysis, you've got this really powerful combination.
Yeah, BlackRock's global tech leadership, especially that AI, Aladdin, bringing sophisticated data-driven investment management.
Meeting Jio's incredible local distribution network, that deep reach, plus their history of just shaking things up with pricing and accessibility.
And the clear target seems to be that huge, largely untapped market in India, people who maybe only use bank FDs right now, bringing mutual funds to them.
And for you, the listener, the potential outcomes could be significant. Lower investing costs, much easier ways to start investing, maybe with tiny amounts.
Making it truly accessible.
Plus, maybe even a boost to your existing portfolio if millions more people join the market. It really is a potent mix.
Global tech muscle meets local distribution power with a clear disruptive intent. It could genuinely reshape things.
So definitely not just some dry business news. This could directly touch your financial journey and really the future of personal finance for everyone in India.
It has that potential for sure.
Which leaves us with a final thought for you to chew on. If this Jio-BlackRock partnership really does succeed in bringing mutual fund investing to the masses, to millions who've only ever known fixed deposits, how might that fundamentally change India's entire financial landscape? And what does it mean for what we even consider investing for the average person going forward?